All right. How is everybody going? How's everybody doing? Hi, Gretchen. Good to see you. Bobby Piton here with PreActive Investments. I'm going to go over a few things happening in the world. It looks as though the markets are selling off a little bit. Small caps are down 1%. Tech is down about 60 bips. And we're going to go through some movers and shakers as well as talk about I guess what the moderate Democrats want to do, they want to remove these SALT deductions. So we'll talk about that and how that impacts the markets. We're also going to hit on the Federal Reserve balance sheet. We haven't looked at that lately, but I do think it's worth looking at because the number is continuing to climb. So if you guys are wondering why we should be very, very concerned about the Federal Reserve as well as its policies, let's just look at the data. Let's look at the videotape. We'll pull up the balance sheet and look at the numbers and why the inflation is spilling over into the real economy. As we all know, we can see firsthand how much the cost of living is going up with regards to rent, food, energy, you name it. Prices are going up. You combine that with shortages that are occurring due to, obviously, some of this is due to the virus. Other parts of it are due to an ongoing economic war that we are in the middle of. So it's a combination of, wow, we're in the middle of an economic war. We have shortages caused by that. Chips taking place right now with regards to the car industry has talked about issues that it's facing because of a shortage of chips. We have a shortage in some of the materials for housing, which is why some of those companies. There was one today that said that they're going to have to cut their margins slightly because of shortages in the supply chain. And we'll head on the Federal Reserve. So all of this stuff is happening literally all at the same time. It is interesting because as all of this stuff is happening, the market is at all-time highs, which is very fascinating. Under normal circumstances, this would not happen. I do have my own little theory as to what I think is happening, and maybe I'll share that. But before we go there, let me just pull up. I'm going to go and pull up the Federal Reserve, okay, balance sheet. So let's start with that because that's always fun. This helps explain a lot of what's taking place with regards to the current state of the world and how assets are pricing and why you have to be very careful if you sit things out. A lot of people sat things out in the past 18 months, and they lost. They're not only did their cash get debased by sitting things out because of inflation that we're all experiencing. They had no inflation on the asset side of their stock portfolio, possibly, and so they got the worst of both worlds. They sat in their cash. And they had their money debased, and they didn't participate in any of this move up, which is very difficult to sometimes recover from that. So let's go to the balance sheet. Okay, so right here, if you go to federalreserve.gov and you pull up monetary policy, you will see that the balance sheet of the Fed, now keep in mind, folks, this is in millions, right? So this is, I talk about this all the time. There's a million, millions, and a trillion. I know I say that a lot. I try to get people to think about what $1 trillion really means. I think a lot of people doesn't register what $1 trillion is. It's literally, imagine a million families each having $1 million. That's what $1 trillion is. So if you took a city like the city of Chicago and 1/3 of the city, one third of all the people in the city, pretty much every household in Chicago. Imagine if every single household in Chicago had $1 million. I think there's probably about 1 million households in Chicagoland, definitely in Chicago. Definitely in Chicagoland, probably in Chicago, because if the average number of people per home is 3, I don't think it's too far-fetched, but that's what $1 trillion is. And you could see here, back in 2008, just a quick overview, The balance sheet of the Federal Reserve was under 1 trillion. It was 909 billion. So it was 909,982 millions back then. I don't know if you can see that. I can expand it a little bit. And you can see for yourself that when I click on here, you can see that total assets in millions of dollars, 906,233.75. Okay, then it crossed 1 million millions on September of 08, right when the financial crisis was going to hit. Then it spiked, it doubled in a few months. By December, it went to 2 trillion. And then it kind of dipped to 1.9, 1.88. And then as you can see, it's kind of never looked back. The Fed has continued to expand the balance sheet. It went from 2.8, shot up to 4.4. And then this is when Trump was elected right here. November of 16, it was 4.4 trillion. And then all of a sudden, Trump is in office. He starts changing policy around. If you notice, the buying power of our money was stronger. Price of oil fell. He brought on oil from Alaska, right? All these things were leading to the American worker seeing the largest wage gains in over 50 years. And then there were more jobs than people to fill those jobs, if you guys recall that. Well, what happened with the money supply when Trump was in the White House? Well, the Federal Reserve balance sheet, it went from 4.4. It dropped. Look at that. Isn't that something? It dropped to 3.77. Look at that. Dropped to 3.77 trillion. So under Trump, the money supply, the amount of money dropped at the Federal Reserve, the amount of assets they owned, and our prices were down. Did you notice that? Let me say that again. I'm going to go to the camera for this. Think about this for a second. We're always told the government needs to kind of do its thing and print money because, we need it. We need it for the economy to function. Nothing could be further from the truth. The amount of money and the size of the balance sheet of the Fed was falling, and yet our prices were stable, if not falling. And, so that number went from 3.77 in August of last year, of 19. So 2 years ago, it was $3.77 trillion. Okay. Now let's look at it, folks. Okay. 3.77. We'll just look at September. So it's a nice clean 2 years. It was 3.8. So 2 years ago, it was 3.8. Now take a look, folks. Then this is when the COVID hit. They kind of did their thing. Actually, right here, February of last year. They kind of knew it was coming. This is when that one company I told you guys about, they went public, and then it went up 27-fold. But if you look here, right here, November, that one company went public. The money supply started to go up, and then boom, it shot up like a rocket. 7.1 trillion. $7.1 trillion within a matter of 9 months? And now look at it, folks. Just this year, okay, we are at 8.3 trillion now. So it's more than doubled in 2 years, the money supply, and nobody's outraged. Just from April of this year, it's up over 500 billion. So I want you to think about that for a second. What are the liabilities? Well, keep in mind, when you hear deficit spending, right? Everybody's hearing about this concept of, well, the government wants to spend 2 trillion more than it takes in, right? 2 trillion. How do you think it finances that, folks? It goes to the Federal Reserve and says, look, guys, we need money. We want to become Bolsheviks here. We want to turn America into a communist country. How do we do that? Well, I'll give you, if you give us IOUs, right? I.e. issue bonds, from the U.S. Treasury, and the Federal Reserve buys those bonds. Keep in mind, folks, the U.S. Treasury and the Federal Reserve are two separate entities. The U.S. Treasury is the one that issues bonds. They hand it over, and the Fed says, okay, we will agree to print some money. And so the Fed printed another 2 trillion of liquidity. Actually, it printed 500 billion in the past 4 or 5 months, but it printed over $4 trillion in 2 years. It's at 8.3. It was at 7.7. So what is that? I mean, almost you're closing in on 5 trillion, $4.5 trillion. So you sit there and you're like, wow, Bobby, 4 million people, 4.5 million people, $1 million. So if there's 125 million Americans that are working, I want to give you guys some perspective about how much money this is. 125 million people, if you cut them a check for $8,000, okay, you had enough money, you got a nice big slush fund, right? You got a nice trust fund for being born, into one of these trillionaire families. So let's just say, one of these trillionaire families that exist out there, they said, you know what, these Americans are okay. I'm going to give them each a check for every American that's working full time, of course. I'm going to give each one of them a check for $8,000. All 125 million families in America, or workers, 125 million workers in America. We're going to cut them a check for 8 G's. Okay, $8,000. That's $1 trillion, folks. So they just printed up the money supply, $4.5 trillion. So what's 8 times 4? 32. Plus, what's the other number? $0.5 trillion. So now we're at 4 G's there. So now we're at $36,000. So $36,000 over 24 months is $1,500 per month for 2 years straight. I want you to imagine that every American worker in this country received a check for $1,500 every month for 2 years straight. That's how much money they took on at a minimum of new debt. Okay? 1,500 per American worker, 2 years straight. So you ask yourself a question. Did you guys get 18,000 coming to you? That's my question. All the workers out there that are watching this, did you each get 18 grand over the past 2 years from your government? If the answer is no, ask yourself, how many other Americans that are watching this clip are like, wait a second. Well, where the hell did all the money go then? That's the big question. Where did all the money go? Who the hell ripped off all this cash that in the past 2 years? This is one of the biggest heists ever in U.S. history, global history. It's absolutely disgusting, folks. So anyways, that's what's going on with the Federal Reserve, and why I said not only we don't need to audit the Fed anymore. It's a criminal organization as far as I'm concerned. This is criminal, what they're doing, and we can all see it. They're literally trying to destroy our currency. I think it needs to be disbanded, personally. And I think that, when people own real assets, don't worry about it. When people say, Bobby, you can't do that, all the assets are going to drop like a stone. I say, as long as you own legal claims on the assets, you don't lose the assets. So that's why I tell people all the time, own the individual stocks. Okay. Contact me at PreActiveInvestments.com if you'd like my business partner, which also happens to be my wife, is a financial planner, and myself to manage money on your behalf. We do stuff in individual securities. We do not buy ETFs, and we do not buy mutual funds for that matter. And we have some that people have brought in, but we do not buy mutual funds and we do not buy ETFs for the simple reason that if everything gets reset for some crazy reason, that happens. I'm not saying it's going to happen, folks, but if something like that happens, it's the people that have the stocks in their own names, in their own account title. All the money that we manage for people is in their own individual account. We just have discretion to invest it and trade it, the way we see fit when we see opportunities. But that's why, because then it's literally titled in their name. And so that if everybody's like, what the hell is going on? You got to get in line with a bunch of other people that own an ETF. It's going to be like, good luck with that. I don't know how long it's going to take to clean that mess up if it ever does happen. But I do know that if you own the shares in the company that you own in your account, you contact that company. If everything were to get redone with a different currency for some reason, and you say, hey, I own 0.0001% of this company. Here's my proof. I have my certificates and my name in this account. And that's the difference, folks. You want to be sure that you own your assets in your name when you're investing in the stock market. I do believe that. I think a lot of people have thought, or they've underestimated the risk of owning shares within a fund structure. I think it could get pretty ugly. Okay, so now let's go to the SALT deduction. Okay, we're going to go to that real quick. So if you look here, we're going to just click on this. So as you guys recall, in order to penalize states that were taking advantage of the federal government, President Trump put a cap in. Remember that? It was $10,000. So if you live in a high-cost state, like I happen to live in Illinois, which is an absolute disaster, you don't get a tax deduction on your interest past $10,000 on with your federal taxes. So the Democrats, in particular New York and New Jersey, are pissed, as you know, and they've been angry for a while. They want to remove this, right? They want to cut this. They want to take it back off because they want the gravy train to come back to their state. And what's interesting is listen to this statement by this guy, this joker, Tom Suzuki. We need to have this state and local tax deduction. We built a whole system around it. So he just tells you right there all you need to know. We built an entire system around it. Look, we can't keep overspending, folks. If you don't restore that tax deduction, you guys are making the state and local government more efficient, folks. What do you think you're doing? We want that skim. We need that federal government to give that tax deduction back, because every dollar that we get that tax deduction back, if people are paying $1,500, that's $1,500 they supposedly save. We can juice them an extra $1,500 per property. So you guys are taking away the juice from the squeeze, right? These guys think it's their orange. They think the money, they think that they should be able to jack you in the face on these properties. And they want the federal taxpayers of other states that are not letting this madness take place to subsidize this. This is what's taking place, folks. So I think personally, I don't think we should even have a tax deduction over time. We should figure out how to phase it out for mortgage interest, because it would put tremendous pressure on all the local governments by the citizens to cut their damn spending. And that's the way you do it. You readjust and realign the incentive structure of how you pay your bills, as a society or as a community, so that you see the true cost. We need to end the federal subsidies, and frankly, we need to simultaneously slash the federal government. I'm calling for at least a 20% cut minimum. They're ripping us off, folks. The voter fraud is about tax fraud. Okay, that's what's going on. So not tax fraud, but the federal government fraud that's taking place. So anyways, this is a very, very big issue. And I do comment about it and write about it. So check it out sometime on my Telegram at Bobby Piton if you're not there already. Okay, so now let's go to, we're going to go over one company that publicly reported today. So let me go back to that screen here. We'll take a look at something. So here's the SEC website. I talk about it all the time. You guys should always have a gander at the SEC site if you have questions. So we're just going to go to, let's go to CNBC, just see who's moving today. I like to just see, let's take a look. Look at this, folks, right here. Job openings soared to 10.9 million as companies struggle to fill positions. So ridiculous, insane government policy is distorting things. By giving subsidies to people to sit on their butts at home, there's almost 11 million jobs that are looking for somebody to fill them. 11 million. So keep in mind, folks, right now in the United States, the unemployment rate we're almost probably close. There might be just as many unemployed people right now as there are job openings. But, part of the problem is we have a lot of people that frankly don't have a good skill set because they haven't been updating their skills over time. but that's also that's on them, but it's also on public policy that we don't have the best of public policies in terms of our schools training people. Instead, they're more worried about indoctrination. As everybody knows, I'm not telling anybody anything that they don't know already, but indoctrination has become much more important than actually making sure that the skills that are needed for the workforce of America are being met. We're filling enough people into those roles. So this company called General Mills, you guys might have heard of them. Hold on, did they report? Hold on, General Mills. Yeah, so it's up 4%, but I don't see any news. Okay, so we're going to go to GPN. I want to pull a company that has, I want to pull a company that's reported earnings. Hold on, this is Freeport McMoran. This is a copper company. Hold on a second. So let's just go to. We're going to go to the next one. How about we pick? I think GPN. Okay, so we'll look at GPN. That one's up like 6% today. So GPN Global Payments sounds like a credit card company. Oh, August 2nd. No. So nothing is really going on with earnings on these companies. They just happen to be moving. So then the question is, let's see the biggest movers on the day. Let's see if we can find something. So Coinbase, Citrix. Okay. So shares of Citrix, this is an activist, took an interest in it. That's why it's up 3.5%. Chip makers were down 2. Not a whole lot of people reporting, folks. So since there aren't a lot of people reporting, there's not a lot to say. I think that right now the markets are near all-time highs. I know that the VIX is back at around 18. Gold is around 167. Treasuries are still 130 or so, 130, 135. And so the markets are very stable, but underneath the surface, we do see a tremendous amount of pressure that's building. And the question is, which way does it break? And I do think that rates are being pinned down. Maybe this is why the Fed balance sheet went up by $500 billion. Think about that for a second. What if the Federal Reserve is trying to keep rates artificially low and they're buying bonds as people are selling them, even though inflation is going up? This could be why the Fed is continuing to print. It's a really horrible situation because as the Fed continues to print to try to pin rates down, if people don't keep selling, if people keep selling, they'll have to print larger and larger amounts of money, which can turn into a very disastrous result. And so I sure hope it doesn't happen. All I could tell you is, now's the time to be defensively positioned, and just this obviously this is educational purposes only. You should examine whether or not you should be defensively positioned. If you've made a lot of money, you should definitely look at consider de-risking. And I think this has been one of those years where you kind of keep de-risking and the market keeps going up. And it's very easy to get caught up on that. But all I could tell you is go look at some past history, going back 30, 40, 50 plus years in the markets. All of a sudden it looks good until it doesn't, right? The day of reckoning sometimes happens. And so make sure that you're properly situated so that you can absorb whatever it is that whatever possibility brings our way. So that's what I would say about that. So I hope you guys enjoyed the broadcast. Don't forget to like it, share it with your family and friends. And if you're looking for someone to manage your money on an individual security basis, check us out sometime, PreActiveInvestments.com. Hope you have a wonderful day, and I will talk to you soon. Thank you.